Hello, good morning, and welcome to your daily dose of market insights by OANDA. I'm Kelvin Wong here, the senior market analyst of OANDA Asia Pacific. Very good morning to all. Today will be Thursday, the 18th of January 2024. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook on the various cross-asset classes, let's have a recap of what happened yesterday during the US session in terms of performance of the various cross-asset classes ranging from the major stock indices, the FX market, gold, as well as West Texas oil, which is WTI crude. What happened yesterday over here was a rather lackluster session for the major US stock indices. So all the major US standard stock indices ended in the red, which we have more or less been anticipating for those who joined our daily dose of market insight yesterday, due to this short-term push up in the US 10-year Treasury yield above 4.06%, and also the resurgence of short-term dollar strength coming back into the picture since Tuesday Asia session. So what we have over here is that both the SPX and the Nasdaq 100 actually recorded daily losses of negative 0.56%. The worst hit was the Russell 2000, down negative 0.73%. The Dow Jones Industrial Average also ended yesterday with a loss of negative 0.25%. And also due to the fact of this rising that the push up in that US 10-year Treasury yield above 4.06% has caused a damper on gold price as well. So spot gold XAU/USD was actually down negative 1%, and it broke below the short-term support at 2015, but managed to hold above the psychological level at 2000, where it tested yesterday during the US session and managed to stage a minor bounce. Whereas for WTI crude oil, while whipsaw, but managed to hold above the key short-term pivotal support for West Texas oil at $71 per barrel. Yesterday, it ended the US session with a positive gain of 1% due to this ongoing hostility that is still being seen in the Middle East region, especially around the Red Sea shipping route that could potentially disrupt oil tankers from actually using that route to actually ship oil. So that actually causes oil prices to remain supported, at least in the short term. All right, so key economic data that actually causes this dampen in the risk-on behavior is due to that this retail sales. Okay, so US retail sales as they came in better than expected. So if you look at my data yesterday, so the economic data calendar yesterday, so what we could see over here is that retail sales in US came in at 5.6% above forecast of 4% and above 4% that were recorded in November. So if you look at the trend on the retail sales in US retail sales, so it's a very strong upbeat consumer spending in the holiday season. So actually that's positive for the US economy, but not positive if you look at from the market perspective. Why? Because if you look at the market perspective, what market is expecting since the start of Q4 last year, that the Fed is going to be much more dovish rather than hawkish. And after that, the Fed actually signaled that they are going to actually cut interest rate this year. But when were they going to start cutting and how much they will cut? So that's actually a wild cut. But given market expecting of a much more liquidity easing condition coming into 2024, they are looking for the first rate cut to come in as early as March with a high of 80% odds at the start of November last year, and this odds has slowly been starts to temper off from 80% to 70% and to hovering around 60% last week because of the various Federal Reserve officials has started to come up and push back this we call it optimism of the first rate cut to come in as early as March. And yesterday data showing very strong consumer spending in US as interpreted by what you see on the screen over here. The US retail sale jumped to a high number of 5.6% year on year in December. So that actually kind of toned down the expectation of the first rate cut to come in March because the US economy is still relatively robust in terms of consumer spending. So the funny thing about stock market over here is that yes, stock market wants liquidity, but in order to see liquidity, we need to have a much more less rate hot economic data. Okay, something that is not as rosy as 5.6% year-on-year retail spending. So that actually causes the market to actually profit take yesterday. So if you look at the expectation on the CME Fed Watch 2, so like I said earlier on, the market is expecting to come in March. So if you look at it over here, so previously a week ago is about 65%. Yes, a day ago 63% for the first rate cut to come in. So all these are actually odds as being priced by the interest rate futures market, the Fed Fund futures interest rate market. So right now the odds right is being reduced down, tempered down, I would say from 63%, around 65% a week ago to now around 59.6%. So I would say it's 60%. Still not too bad. I mean, it's still hovering above the 50% level. So market is still kind of still hoping. There's still a hope or a optimistic hope of more than 50% that the Fed will start to come in to enact the first rate cut in 2024 March FOMC meeting. But most importantly, in terms of market dynamics over here is that I'm concerned more about the 10-year US Treasury yield. So if you look at the 10-year US Treasury yield right now, as seen on my chart, I could see over here on my screen, it starts to actually break above the 4.06%. Okay, let me change this as a different color. Oops. Okay, it starts to surpass above 4.06%, and also the RSI now is also holding above the 50% level mark. Okay, so what we could see over here, right, if the potential chance of it retracing back to around 50% to 61% is rather higher. That means that 4.33 to 4.54%. That means what we could see over here at this point in time, if there's a continued push up to test this zone over here, it could actually ignite a bit of further risk off behavior, at least in the short term, in the major US stock indices to actually do a bit of what I call corrective pullback to retrace this ongoing 2 months plus of a rally that kickstarted in late October last year. Okay, then we also could potentially see a further strengthening of the dollar as well if this thing starts to take hold. And also on top of that, we also have a negative news flow on a key US component stock yesterday, which is Apple. Why Apple is important? Because Apple is the biggest weightage cap in Nasdaq 100, and if I'm not wrong, they are coming is sharing almost a very close component weightage with the Microsoft in S&P 500. So now they are actually pushed down to second spot in terms of market weightage cap in the S&P 500. So net all in all, it still have a significant influence on the movement of the US benchmark stock indices, especially on the S&P and the Nasdaq 100. So negative news flow over here from Apple saying that Apple could face a antitrust lawsuit in US as soon as coming in on March due to their software and hardware limits that actually kind of limit their rival we call it product development. So something that actually managed to actually see we call it to reinforce that profit taking activities that was seen yesterday as well. So you look at the heat map of the S&P 500, very negative yesterday in terms of intraday performance. Almost all of them are in the red, with the mega cap stock that is leading the losses. All right, due to that negative news flow that is spilling out of Apple yesterday. Okay, now so this is the key. Okay, one more key economic event that took shape over here was Lagarde. So ECB Governor Lagarde actually made a speech during one on the sideline of Davos. So Davos is actually the World Economic Forum that is ongoing right now in Switzerland. So they will actually see a lot of key policy makers in terms from the business side and from the government side and the central bank side making key speeches on the sideline. So Lagarde said that it's likely ECB will cut rates in summer. So instead of March, rather in summer. So summer, I talk about June, July. And he did mention over here as well that, okay, he said while the president recognized how consensus is forming, that means on the pricing of the interest rate market, he also said that the market bets are aggressively rate cuts are a distraction. So what he say over here is that she's trying to actually pull back or temper down market dovish expectation for the global central bankers, I mean even the ECB itself, to end up rate cuts as soon as March. So he tried to pull back, temper down this we call it extreme optimism that is being priced in the futures interest rate futures market right now. So all in all, what we could see over here is that currently, right, the tonality of key central bank policymakers, ranging from the US and from the ECB, most importantly, they are actually indicating to us, yes, there will be rate cut coming in 2024. But they're telling markets that participate, hey, but do not expect a pace of so aggressive rate cut, and uh, the rate cuts may not come as early as being priced in by the interest rate futures market right now. Okay, so these are the key data and event that took shape yesterday. So now let's jump straight into the short-term technical outlook. So on the short-term technical outlook yesterday over here is that if you look at yesterday throughout the end of the US session, the dollar actually, let's start with the FX market first. The dollar actually ended almost unchanged. If so, you look at the 5-day rolling performance chart right now as of today, you see that the dollar strength start to temper off during the US session yesterday, and right now it's trying to trade actually sideways. So it's more like a mixed bag picture right now in short term on the dollar story. But overall, if you look at the trend, is still on a uptrend bias since last Friday. Okay, since last Friday. Okay, so now let's look at the individual technical analysis of the major FX pair, starting first with the euro dollar. Okay, so now let me expand my screen. Okay, let's start off with the euro dollar first over here. Okay, so on the euro dollar chart, yesterday we do have a bearish bias. So the bearish bias actually hit the first support level, which is the 200-day moving average at 1.084 before staging that bounce off during the second half of the US session. So right now, it's actually testing the 50-day moving average, acting as a resistance, and also the upper limit of the 1.08905 short-term pivotal support level, that short-term pivotal resistance level that we highlighted yesterday. And if you do a Fibo retracement of this last push down, the price action is actually resting now at 38.2% Fibo retracement. Okay, so with that, we are still using 1.0905 short-term pivotal resistance for today to maintain that short-term bearish bias outlook on the euro dollar, to potentially see a retest on the 200-day moving average, which is at 1.0840. A break below 1.0840 potentially exposes the next intermediate support level at 1.08 level. Okay, only an hourly close above 1.08905, 1.0905, pardon me, 1.0905. This line here that I highlighted on my screen will invalidate the short-term bearish bias to see a kind of a squeeze up to retest the 200-day moving average, not 200-day, the 20-day moving average, pardon me, the 20-day moving average that is acting as a near-term resistance at 1.097 level. Okay, so above 1.097 exposes the minor range resistance at 1.10 figure level. So still using 1.0905 short-term pivotal resistance level to maintain that short-term bearish bias on the euro dollar for today. Okay, now what's next on the sterling dollar? So on the sterling dollar, also similar, it came down, retested the 50-day moving average at 126 figure, then thereafter shaping a bounce. So for today, our yield a much more higher short-term pivotal resistance, which is at 1.2720, which is slightly below above the 20-day moving average as well, where price action is still hovering below it. So as long as 1.2720 holds in terms of short-term pivotal resistance, then surpass the upside, we will still maintain that short-term bearish outlook on the sterling dollar to potentially see a retest on the 50-day moving average again at the 126 figure level. So this is actually a graphical support level, minor graphical support level as well. You could see formerly the minor swing high of 8th of December and 12th of December. Okay, that was acting as a pullback support yesterday. So a break below 126 figure level exposes the 200-day moving average, which is acting as a support right now at 125.50. Only an hourly close above 127.20 short-term pivotal resistance will invalidate this short-term bearish bias to see a squeeze up to test the next intermediate resistance at 127.80, followed by 128.20 level on the sterling dollar. So still no change with a much more slightly higher short-term pivotal resistance level for today, 127.20, to maintain our short-term bearish bias on the sterling dollar. Okay, dollar yen. So dollar yen yesterday squeezed up our upper limit neutrality level. So I could see over here is actually evolving within a minor ascending channel that is in place since 28th of December 2023 low. So I'll be using a 14730 short-term pivotal support level for today, which is this former minor congestion area at the start of Wednesday now turns into a pullback support level. And also if I do the Fibo retracement, taking from the last push up from last Friday all the way to yesterday's intraday high, it will be very close to the 23.6% Fibo retracement. So as long as 14730 key short-term pivotal support level holds for today, potentially the dollar yen could see a test on the upper limit of this ascending channel that I drew from the low of 28th of December 2023 low, confluencing at a one-time Fibo extension level, taking from the low of 28th of December, projecting to the high of 5th of Jan, projecting from the low of 9th of January, acting as a resistance as well at 149 figure slash 149.30. So flipping to a bullish bias on the dollar yen in short term, as long as 14730 short term pivotal support holds. All right. But however, a breakdown below 14730, that means an hourly close below this level, will negate this bullish tone to see a slide towards the 50-day moving average at 14625 and even 14540, which is close to the upper lower limit of this ascending channel. Aussie dollar. So Aussie dollar yesterday broke below our support level, short-term pivotal support level, and all the way plunged all the way down to 65.20. So what 65.20 is? 65.20 is this level over here, which is previously the congestion area of 5th of December and 13th of December. Okay, 65.20. But however, what you could see very interesting over here is that it's still it broke below the 200-day moving average, but the hourly RSI right now is actually showing that bullish divergence and continue to shape higher low. Okay, at this point in time, after the flash of that bullish divergence at the oversold region, the hourly RSI. So what it actually implies over here in terms of price action, that means indicating to us that the last push down from last Friday all the way yesterday's intraday low is losing downside momentum. So with that, I rather switch to a neutrality stance for today. That means sideways neutrality stance between 65.20 and 65.95. All right, only an hourly close back below 65.20 will start to see a further impulsive down move towards the next support level at 64.45, which is the graphical area over here, 64.45. An hourly close above 65.95 will potentially kickstart at least a minor counter trend rebound scenario towards the former range support level, now turns into a pullback resistance at 66.50. All right, so due to kind of a mixed element right now, with a positive bullish divergence that's being flashed out on the hourly RSI, indicating to us that the current downside momentum is losing strength. So we'll be switching to a neutrality stance for today on the Aussie dollar between 65.95 and 65.20. Okay, so that's pretty much sum up for the FX market. So let us flip on to the Asia stock indices first, which is the global major benchmark stock indices. So let us start with the dollar yen. So dollar yen yesterday we were bearish. We do have a support level to watch. We'll be at 35,360, where market price action managed to hit that level and shape a bounce as well. So the hourly RSI now has managed to actually shape higher low and inch back above the 50 level mark. Okay, the 50 level mark. So indicate to us that downside momentum has started to ease off, and as well as potentially short-term bullish momentum has started to creep back into the market for the Japan 225 or the Nikkei 225. So with that, right, I'll be flipping to a bullish bias above using 35,360 as my short-term pivotal support for today. We're so very close to the lower limit of this minor ascending channel that is in place since 4th of January 2024 low. And if you could do the Fibo retracement, taking from the low of 4th of January all the way up to the intraday high of Monday intraday high, which is this minor range resistance range top over here, is 23.6% Fibo retracement as well. So with that, as long as 35,360 short-term pivotal support holds, flipping back to a bullish bias on the Japan 225 to see at least a retest on the minor range top area over here that is acting as a resistance since the start of this week, which is at 36,220 level. All right. So a break above 36,220 exposes the next intermediate resistance zone at 36,460/36,660. Only an hourly close below 35,360 will invalidate this short-term bullish revival to see the continuation of this minor corrective decline towards the next support level at 35,100. A break below 35,100 exposes the 20-day moving average that is coming to act as a support level at 34,460. All right, so flipping to a bullish bias from a bearish bias yesterday, as long as 35,360 short-term pivotal support level holds. Okay, now Han Seng. So with the Hong Kong 33 yesterday, we do have a bearish bias, and it almost hit our support level at 15,100/15,000 psychological level. So what's 15,000 psychological level? 15,000 psychological level is very key. Why? Because if you go back to the daily chart over here, there's a couple of Fibo extension level, and also correspond to the we call it the former major swing low area of October and November 2022 last year. Okay, that lead to a bounce of what I call a significant rebound. Then thereafter, after that significant rebound, price action continued to flatten on the downside. So pretty key graphical support level that was reached, and also a Fibo extension level. So with that, given that the RSI has now starts to actually exit from the extreme oversold level, okay, we will actually be flipping to a short-term bullish bias to look out for a potential counter trend rebound scenario on the Hong Kong 33. So as long as 15,000 key short-term pivotal support holds for today, we will be flipping from a bearish bias to a short-term bullish bias for a potential counter trend rebound scenario. First resistance level to watch will be 15,800, then thereafter the all important 16,000/16,100 level, which confluencing with this minor descending trend line all the way from the high of 2nd of Jan, okay, this year. And also if you do the Fibo retracement taking from the entire down move, it also correspond to the 38.2% Fibo retracement as well. Okay, so flipping to a bullish bias from a bearish bias for a potential counter trend rebound scenario, as long as 15,000 short-term pivotal support holds on the Hong Kong 33. However, hourly close below 15,100 level will invalidate this short-term minor counter trend rebound scenario. So I will stress the word minor counter trend rebound scenario only because there's still not enough element to say that the Hong Kong 33 has started to make a major bottoming configuration. And hourly close below 15,100 will see the continuation of this bearish impulsive down move to test the next support level at 14,600. So 14,600 is in fact, if you go to the daily chart, is the swing low, the right exactly at the swing low of 28th of December. Okay, so that's actually the short-term technical outlook for the Hong Kong 33 that I share with you all. Now, Germany 30. Okay, so for Germany 30 over here is that price action also came almost close our short-term pivot, our short-term support level that we highlighted. So yesterday, if you recall, we do have a bearish bias. short-term support level to watch for the bearish bias at 16,330. Price action has almost met this level. So with the level being met at 16,330 and also corresponding with that 50-day moving average, graphically is also the lower limit of this expanding wedge configuration that I drew from the low of 14th of December. And the RSI also managed to exit from the oversold level. So with that, I'll be flipping to a bullish bias for today for a minor counter trend rebound scenario as well. So as long as 16,330 holds, potentially the German 30 could see a retest at the near term resistance zone of 16,560 slash 16,640 in the first step, which is also corresponding with this 20-day moving average that's acting as a resistance as well. Only an hourly close below 16,330 will invalidate this potential minor counter trend rebound scenario to see a further impulsive down move towards 16,050 level, which is the next support level to watch on the German 30. Major US stock indices. So let's start with the Wall Street 30, the Dow Jones Industrial Average. No change, still trapped within the neutrality zone that we highlighted yesterday. So still remains a neutrality stance for the US Wall Street 30 between 37,550 level, okay, 37,550 level, and the lower limit at 37,170. Okay, only an hourly close below 37,170 will start to trigger a minor corrective decline scenario towards 36,810, followed by 36,520, which is correspond with the upward sloping 50-day moving average. Only an hourly push up or hourly close above 37,500, 550 will resume the impulsive up move to retest 37,800, which is the all-time swing high area. Above it sees the next resistance coming in at 38,100. Okay, so still sticking to a neutrality stance for the US Wall Street 30 between 37,550 and 37,170. So a bit of a swing on the Nasdaq 100. So given the fact that, sorry, pardon me. So the Nasdaq 100 over here. So the Nasdaq 100 yesterday managed to dip, push down below the 20-day moving average before rebounding towards the end of the US session. So with this unclear kind of configuration, potentially we could start to see a kind of sideways movement on the Nasdaq 100. So yesterday we do have a bullish bias on the Nasdaq 100 holding above 16,660, where price action breached on the intraday before recovering throughout the towards the end of the US session. And given this potential wild swing around the 20-day moving average, the Nasdaq 100 may start to configure into a sideways configuration, at least in the short term. So with that, we'll be flipping to a neutrality stance or sideways neutrality stance for today between 16,910 level and 16,500 level. All right, on the US Nasdaq 100. Only clearance above 16,910 level potentially revive the bullish tone towards 16,990. Thereafter followed by 17,080 slash 17,120 next. All right, so flipping to a short-term neutrality sideways stance between 16,910 and 16,500 level. Okay, WTI crude oil, for WTI crude oil, West Texas oil. So West Texas oil yesterday formed a bullish kind of a hammer configuration, but it's still trapped below the 50-day moving average and the 200-day moving average. So that's the daily chart. So still no change. If you look at the hourly chart, we do have that 71 figure level as a short-term pivotal support. So yesterday it tested and shaped another rebound, a minor V-shaped recovery. So still no change using that 71 figure level as my short-term pivotal support level to see a potential what I call push-up within this range configuration, where the upper limit of the range of resistance will be at 74.95 slash 76.05 level. All right. Only an hourly close below 76 figure level on the West Texas oil will invalidate this short-term push-up scenario within a range configuration to see a further slide to retest in the first step the 3rd of January swing low area at 69.70. Okay, then lastly will be West spot gold. So spot gold yesterday broke below 2015 level, which is the 50-day moving average, and right now managed to stage a bounce right off the psychological 2000 level. So what interesting over here is that elements bit mixed. Downside momentum has started to ease off as seen by the bullish divergence is being seen on the hourly RSI. So with the mixed element, I'll be flipping to a neutrality sideways stance for spot gold XAU/USD between 2019, which is the former minor swing low of 17th of January that was taken out yesterday, and also the 50-day moving average now acting as a near-term resistance as well at 2019. So neutral between 2019 and 2000, only an hourly close back above 2019 will start to ignite a minor recovery scenario to retest the 20-day moving average in the first step. Now I think as intermediate resistance at 2045 level. All right, so flipping to a neutrality stance for spot gold for today, between 2000 and 2019 level. Okay, so what's next on the calendar for today? So let's look at the calendar. So if you look at the economic calendar, what we see over here is for today will be Thursday. So over here at Thursday itself, going forward, what we could see over here is throughout the European session is rather quiet, except for at 8:30 p.m. we do have a federal 8:30 p.m. Singapore time. We do have a Fed speak from Fed officials Bostic at 8:30 p.m. Then thereafter, during the US session, we do have some uh, jobless claim data. So this is the weekly jobless claim data at 9:30 p.m. Singapore time. And during, I think ECB President Lagarde will be speaking again at Davos on 11:15 p.m. Singapore time. All right. So that's pretty much sum up today's daily dose of market insight. So with that, have a great day ahead, and I shall speak again with you all tomorrow. Thank you.